I have compiled the last 4 years of net income for this company from the Securities and Exchange Commission's website for 2016, 2017, 2018, and 2019. All these numbers are from the 10Ks. I have also included information from the 10Q that was recently released, showing the numbers for the first half of 2020. The 10Ks are audited, and the 10Qs are not, meaning that the 10K is typically more heavily relied upon and trusted to be true than the 10Q. This is because an outside party has examined the financial statements in detail. As you can see, the company has just done worse and worse. 2020 has been a rocky year, of course, what with the pandemic and all. But this year, the company is bleeding money. I analyzed the last 4 years of 10Ks looking for trends and patterns to indicate what 2020 could possibly look like. Highlighted in yellow are the estimates that I made, but I made those prior to looking at the numbers from the 10Q because it was so recent. As you can see, the equity and assets have ballooned, just dwarfing the long-term debt and reducing the debt to assets and debt to equity ratios. I did not account for the fact that so much capital was going to be raised and similarly spent on assets. I also had much higher hopes that they would be closer to profitability in 2020. Maybe not profitable, but closer. I estimated that the profit margin would be -10, and -10, of course, is not great. But it was -17 for just the first half of 2020. It's just laughable. And it is always possible that they make a ton of revenue in the last half of 2020, thus offsetting the immense loss from the first half of 2020. But I am not optimistic. I cannot predict the future and can only estimate. No crystal ball here, but no, I don't think so. Let's look at the statement of cash flows at a high level. In 2018, the company used $21 million in cash to operate. That's just to keep the company going. And in 2019, nothing got better as they used $36 million to operate. And in the investing portion, we can see that they received over $3.5 million from a divestiture. A divestiture is a sale from part of a subsidiary or something of that nature. It's difficult to ascertain exactly what that line statement resulted from, but needless to say, it is unlikely to be a reoccurring cash source for the business. But anyway, they made money from investing. Next, if we look at the financial activities section of the statement of cash flows, we can see that they're making money to keep them afloat by buying and selling securities, be they bonds or stocks, in their own company. They've just been raising capital and raising capital. The hype is literally the only thing keeping Workhorse in business. Investors are hyping this stock up to the moon, maybe thinking it will be the next Tesla. But I do not share such optimistic beliefs. I just don't see it. When a stock goes parabolic, meaning it is increasingly exponential, especially with no big changes, it is likely to come crashing back down. Be careful. There is a lot of talk that the USPS will utilize Workhorse to deliver packages on that last mile. This contract could be a game changer. I've heard some people estimate that the stock price could jump from $26 to $60 a share resulting from this contract. It could be big, but if there is no contract, they will likely fall. I could see it falling from 26 to 24, 18, or 16. If you're a betting man, maybe you want to risk it all, but it could result in a substantial immediate loss. The way I look at stocks, it either goes up or it goes down. Most reliable companies go up over the long term. But I don't think this company is what I would call reliable. This company could easily die tomorrow, and all stocks go down to zero, losing 100% of the capital invested. Or it could go up to $60 a share from this deal with the USPS if it were to occur. Contracts can certainly increase the value of a share because a contract would represent guaranteed monies for the company. However, even with the contract, the company could still end up failing. But the contract would be a good signal for investors, thus inflating the stock price even more. Looking at other sources of information, analysts from Yahoo Finance estimate that the price target for this stock is $24 in the coming year. They state that the stock is overvalued, grossly overvalued, and have stated this for the last couple weeks as I have looked into this stock. Analysts from CNN Business are expecting sales to jump from about nothing to $150 million in 2021. This seems incredibly unrealistic and overtly optimistic. Analysts are estimating that sales jump from practically nothing to 20,000 in the fourth quarter of 2020. I'm not here to give advice, but I am not investing in Workhorse. In my opinion, there is far too much hope that they magically start making so much revenue. Go look into it for yourself. There are plenty of people screaming to invest into this company. There are some analysts forecasting great returns.